Hey, TraderGuff here. It is April 20th, and as an intraday stock options trader, I do a written review of my trade of the day every day. So here it is, Facebook, my trade of the day. So on the big picture, yesterday we had sort of a capitulatory run-up. I guess you could say that it was hubris. Um, Not really sure what caused such a dramatic move on the broad market, but it led the overall indices to be sort of hanging out above this rally, looking at a very inflated pre-market on open. Was not expecting us to really hold these PM levels, and that's where we will jump into the big picture analysis on Facebook. Facebook, in this downward channel yesterday, that run up from the big picture that we were just talking about, causing Facebook to run up with it and sort of flag out and be in this elevated topping pattern. In the PM, it broke down really hard, and we began to give back pretty much all of yesterday's gains and fall into this sideways channeled area here. So that's where we'll jump into the play-by-play. And on Facebook, we really see this level here that we were playing off of, the PM low sort of at 212.70, but that 213 to 211.40 area is what we were really staring at. So here it is, that 213 to 211.40 area. This is the 3-minute time frame. What I really look for is the it might have been this candle here, theoretically, because it's theoretically below the VWAP. But on this candle here was my initial conviction that on close I would enter at 939 on the lower low and lower close across the converging 21-day and VWAP. Now I went long 2 as we passed below 209.91, which had been a resistance point, or a support rather, for a couple intraday moves. And that's when I reloaded as we moved past that level there. When I was staring at a $2 move from this level here to I believe it was 209, I was staring at $2, and I took a contract off the table around the 208 level at 942. Then at 944, on continued market strength, as the market began to move even further lower after I sold my contract, it gave me conviction to basically re-enter. It was a really nice pattern. This was a very strong downward pattern, and the increasing volume led me to believe that there was still a move to be had. Re-entering here, I then took another contract off. This is actually the improper way around. There we go. The length of the arrows, I don't know if you notice, is the different sequences in which I bought the contracts. So I sold my next contract at 948 upon hitting 207 level, and that's a pretty big chop. That is a very, very nice move there. From this level to here, that is a $2.50 move, and then from this level to here, that is a $1.30 move. So I took those contracts, took one contract off the table there rather, and then at 950, upon it wicking back up, this super long wick definitely spooked me out as we wicked back up past this 207.40 level. I told myself, this is it. This is where we get out, and I went flat past 207.37. and then we began to trade around that range, and then make a move even further lower. Which would have been a really nice chop, but we just want to, if this was the entire move, we caught about 60% of the move, which if you watch my trades of the day, you'll know that I try to catch about 60 to 66 to 70% of my moves. And that was my trade of the day. Facebook, thank you guys for watching. God bless you, and we'll see you tomorrow. Peace.